Leisure seems to dominate this week's top picks list. But before we get to that, we're going to start with our technician here, Kevin Matris. Since you haven't been here in a long time, we'll give you the
Fair enough.
Starting off with an insurance company.
Yeah, mine is Cincinnati Financial, ticker CINF. And they're a large cap stock. I am very partial to the large caps right now. But they are in the property and casualty insurance. They're not doing anything with healthcare. But in addition to those products, they also do asset management, and they do asset management for institutional investors, retail investors, and the like. The reason why I like them is they are a Zacks ranked #1, so strong buy. But if you were to take a look at their industry is ranked 12th out of 265 industries, so that puts them in the top 5% of Zacks ranked industries. And the reason why this is so important is because we've said it before, but roughly 50% of a stock's price move can be attributed to the group that it's in. And in our tests, we have found that the top 50% of Zacks ranked industries has outperformed the bottom 50% by 2 to 1. And the greatest amount of outperformance is in the top 10% of industries. So with CINF in the top 5%, I think that all of the stars are aligned for this one. Now, if you look at the fundamentals, they look fantastic. Take a look at their evaluations. They also look pretty good. And you can see their earnings estimates, and the stock has been on the rise since they most recently reported a 27% surprise. I think it was maybe a handful of weeks ago. So if you look at their chart, price-wise, they are just now starting to break out. So they've been traveling to the high end of their 6-month basing pattern. About 2 weeks ago, they just broke out, and they're in the very, very beginning stages of what I believe is a pretty solid run. So my immediate price target is $63. That puts it only for a 10% move. But the way I'm playing it is I'm looking at the options. So if you look at the options, this is an alternative way to play this thing. You can get into the stock if you want to. But the options, even in the money options, are exceptionally inexpensive. So you can either do it like that and put a fraction of the amount of money in the options as you would have to do for a stock, or you can really beef up your leverage, maximize this 10% upside to something much more spectacular, but still only commit a tiny amount of money. So I really like CINF.
All right, Nina, you have the PowerShares Dynamic Leisure and Entertainment ETF.
Yeah, it's an ETF for the holiday season. The ticker is PEJ, so it holds companies from restaurants, gaming, casinos, travel, those kind of industries where typically people spend more during the holiday shopping season, or holiday season rather. And it holds 30 companies as of now. Top holdings are Starbucks, Starwood Hotels, Priceline, and Chipotle. So people will be drinking more coffee, eating more burritos, spending more on gaming. It's a Zacks rank #1 ETF, strong buy. And it does not select company based on market capitalization. It is actually one of the smart beta or advanced index methodology ETF. So it selects companies based on a number of investment merit criteria like earnings momentum, price momentum, quality, and value. And because of its advanced index methodology, it's slightly expensive, 63 basis points in expense ratio, but it has been doing very well for quite some time. It has been outperforming its peers, and I expect it to do well this year, in the coming months too.
All right, Tracy, your leisure stock is a little more focused.
Yes, Polaris.
Recreational vehicles.
Yep, they do ATVs, snowmobiles, motorcycles, all the fun things you want to buy, and people are buying more of them. We've seen that kind of with the ATV market. That has been really, really hot. You know, that's the all-terrain, off-road vehicles and all that kind of stuff.
Right.
But snowmobiles have been a little bit more dicey the last couple of years because the Midwest is one of the big snowmobile markets, and there just hasn't been enough snow the last 2 years. But weather-wise, this year so far, we've seen cold and snow early. So the channel checks of what's going on at the dealerships are already showing that sales are already up on the snowmobiles. So they expect a good winter if the weather conditions hold, and because consumers have more money. I mean, the stock market's at near highs. Housing is starting to really see a bigger recovery now, you're going to go out and buy something fun.
Right.
So, growth for these guys expected to grow over 20% this year and next year. They did just buy 6% of their shares for about $500 million, actually, from an outside company that owned a big chunk of their shares. So they spent on that, so that, is bringing down the amount of shares that are out there. But even still, the regular organic growth is going to be in the double digits. It's Zacks number one. It's not super cheap here, but about 24 times. But these guys are, the top of the industry, and they're in all the popular fun areas.
All right, well, we'll leave it there. And if you want more stock pick ideas, go to our website, Zacks.com. They're there daily. They change daily, so check back often. In the meantime, with everyone here, I'm Terry Ruffalo.